Welcome to Yap's Money Life Show. Thank you for your interest and your support to this show. Today, I'm going to talk about gold investment. To invest or not to invest. A client of mine asked me a few days ago about my ideas, about my view about gold investing. So today, I would like to share my views and also my thought on gold investing with the viewers. Okay? Now, you see, from growing money perspective, there are 3 points that we need to note as far as gold investing is concerned. Number one, gold investment is highly volatile. The price moves very fast up and very fast down. So in the record, it has been, there is a case whereby the gold price may drop 38% down within 1 year. So that is a very volatile investment. Can you take that kind of drop or not? Okay, that's number one. Number two, okay, is that there is no proper valuation method for you to evaluate whether it's the right timing for you to enter into gold investing or when should you exit from gold investing. Now, let me give you an example. When we invest in share market, there is such a method we call this price PE method, which is price earning method. So if say when we apply to one particular stock, if the PE is about say less than 10, so it's only a 5, PE of 5. So we can say that particular stock is relatively cheap at low price. Maybe it's a good time for you to consider to enter. So if the PE of the particular same stock is about 50 times or maybe 60 times, then maybe that is considered expensive. Maybe it's a good time for you to actually exit or take profit from the investment of that stock. But for gold investing, there is no such a reference. Okay, even if the price of the gold could be maybe 200 US dollar per ounce, is it cheap or is it expensive? You can't tell. So you don't know whether it's a good time for you to invest or not. So if the price is at 1,200 US dollar per ounce, so is it expensive? Should you get out or should you wait or invest more? So it's rather hard to invest in gold when you don't have a method to determine whether it's expensive or whether it's cheap. The third point to note when you come to gold investing is to know that gold has got no industrial usage. So if you take an example of silver, silver has been quite commonly used in manufacturing and some industrial production. So you can know the demand of silver may be higher in industrial usage, and then when that happens, the price of silver may also go up. And then from there, you can actually make some investment decision to gain and to profit from the silver investment. But for gold, the fact that it has got no industrial usage, you don't really know when the demand for gold will really go up, shoot up, or when the demand will actually take it down. You don't know about that. So by considering the 3 factors that I mentioned just now, you can see actually it's not so easy to invest in gold, okay, and to be profitable investing in gold. So my suggestion is that my advice to a client is that we always treat gold investment as a high-risk investment. It's a high-risk investment, and if one were to invest into gold investment, I would suggest that they would not invest more than 3% of their total investable asset. Okay, not more than 3%. Okay, by then we'll be able to keep the risk to minimal. So, like investing in anything, investing in gold, we need to know the nature of your investment. We need to know what is the risk profile of the investment. That's number one. Number two, we also need to know what is the investment objective. Whether we are targeting for low return, moderate risk, moderate kind of return, or high return. Number three, importantly, we must know as far as this investment concerned, okay, it will be how many percent of our total picture of strategic asset allocation. So by doing so, you'll be able to make the investment decision and still sleep sound at night. this section, I will answer the questions that I received from the viewers. Okay, now I have a question from Norma. Norma is from KL. Her questions goes like this. In episode 9, you talk about optimal investment return. How do I find what is my optimal investment return? Okay, now you see in episode 9, I talk about optimal investment return, and optimal investment return is the return that you need to get in order for you to achieve your financial freedom. So that is a magic number to guide you to do investing. Okay, now there are 5 steps for you to follow in order for you to find out what is your magic number, what is your optimal investment return. Okay, step one is to list down all your major financial goals. What do I mean by financial goals? I mean, say it could be, for example, your children's tertiary education. How much you're going to spend for your children's tertiary education. And so another major goal could be, say, your retirement. How much you're going to spend for your retirement and how long that is going to be. So that's number one. That's step number 1. And step number 2, what you do is you list down all your financial assets that you have. That will include your properties, your shares, your unit trust, your EPF, and all those investment assets. That's step number 2. Step number 3 is that you will do a projection of how much yearly saving that you will have. What you do is that you will take your yearly income minus your yearly expenses, then you'll get a surplus there. That is what I mean by your yearly saving. Okay. Step number 4, you will need to factor inflation rate to your financial goals. Say for example, you need to factor in how much your children's tertiary education will inflate over the years. You need to also factor in how much your retirement living expenses will inflate over the years as well. Okay, so that is the step number 4. And now step number 5, what you need to do is that you need to identify what investment return that this investment asset and your saving need to achieve in order for you to meet all these financial goals that you have. Okay, of course, that is what I mean by optimal investment return. Okay, I must agree that this process is not so easy to achieve because you need to do some try and error until you go and find a number whereby you can make sure that all these assets at that investment return can achieve the financial goals. Okay, now if necessary, if you find that it's too complex for you to go through these steps to get your optimal investment return, and you still find optimal investment return is something very important for you, I would suggest you to get a qualified professional to help you to do this exercise. Then you'll be able to find what is your optimal investment return, and you can use that investment return rate to guide your future investment decision making. If you want me to answer your most burning questions about investment, about money, about wealth management, please drop me an email or WhatsApp me your questions. Okay, so now I have a question from Jason. Jason is from Rawang. He asked, should I invest into oil palm plantation investment scheme? Okay, this is something we call alternative investment. Okay, so basically, oil palm plantation investment scheme is an investment scheme that allows you to own a piece of oil palm plantation business, okay, for less than maybe 10,000 ringgit or even 5,000 ringgit. Okay, so it is an opportunity for you to participate into the oil palm plantation industry. Okay, some of these investment schemes provide you guaranteed returns. And some and almost all of these investment schemes promise you a return ROI which is higher than inflation rate. So it sounds pretty attractive. Okay, I guess that's the reason why Jason asked me the questions. Okay, and all these schemes, I believe, they are registered with CCM, Companies Commission of Malaysia. Okay, and as I say, it's an alternative investment, so it's a good opportunity for you to diversify from all those traditional investment that you have. However, there are 3 points that we need to note before we invest into oil palm plantation scheme. Okay, point number one is that you need to be able to check and assess the management ability to manage the business efficiently, okay, meaning that reduce costs, right, manage costs, control costs, and to manage the business profitably, to give you the kind of return they promise. That is point number one to note. And point number two to note is that you need to see whether the fees they charge you and how they're going to make profit and how they're going to make some give some charges to you, whether this is all transparent to you or not. Because if it's not transparent, you may be charged for some hidden cost that you do not know, then at the end of the day, you may not get the return that been promised. Okay? And point number three for you to note is that of course, they may say, under certain scheme, they may say there is a trustee involved, but you must also be very careful to see how does a trustee works in this particular investment scheme, because it may not be like a unit trust trustee scheme, whereby the trustee will hold the money of the investor, and then whatever share the fund manager buy will be kept inside the trustee. But in this case, maybe not all the investor money is kept under trustee. So the protection kind of level may not be as strong, as high as a unit trust kind of trustee scheme. Okay. Now, so if we intend to invest our money, grow our money with high certainty, I would suggest that maybe you should consider to invest into, say, Plantation public listed share instead. Those Plantation company shares, they are listed in Bursa, Malaysia. If you compare to the three notes that I mentioned just now, number one, you can be sure that those shares who's capable to be listed in Bursa, they have got good and strong management with a good experience to manage the business profitably. That's number one. Number two, because that they are governed by Bursa Malaysia security commissions, and then also all the proper best practice guideline in running the business, you can be sure they are whatever transparency will be there, good governance will be there to make sure the investor's interest is protected. So my suggestion is that if you want to invest into oil palm plantation kind of business to participate in the gain from the industry, you should also consider, okay, or I would urge you to consider investing into the oil palm plantation share, which is listed in Bursa, Malaysia, because I think that will be able to help you to grow your money with high certainty and with less risk. Thank you so much for watching. If you wish to learn more about how to grow your money with high certainty, please visit my website. I will be very glad if you are able to apply my ideas into your personal wealth. However, if you feel that you need assistance to apply my ideas into your personal wealth, feel free to WhatsApp me. I'll be glad to get my wealth managers to help you. Okay? If you also find that this video to be useful, please comment, share, and like. Have a great day. Hey there, if you like my video, please remember to subscribe to my channel.